I think I messed up that video intro, but we won't worry about that for right now. My name is Robert Schoenberger. I'm editor-in-chief of IndustryWeek, and welcome to Production Pulse, our bi-weekly live stream where we talk about issues affecting the manufacturing world. And today we're going to be talking about electric vehicles, how 2023 shaped up, and what to expect in the new year. And I'm really happy to welcome two automotive experts from great companies and great organizations, and one Industry Week editor. First off, we have Kristin Dziczek, who is a policy advisor at the Federal Reserve Bank of Chicago. And we also have Stephanie Valdez Streaty, who is director of industry insights at Cox Automotive, which is an automotive giant that works on the retail side with brands like KBB.com and several others. And from our staff, we have Laura Putre, who is our senior editor, who covers a lot of leadership issues and covers the auto industry for us. Welcome, everyone. Appreciate having you on today.
Thank you for having me.
Thanks.
And before we go any further, I'm going to give the floor to Kristin for just a second to give some disclaimers about the Fed and rules and all that.
Yes, it's a hazard of the business of working for the Fed, but any comments that I make on this broadcast are mine alone. I do not speak for any other people who work for the Federal Reserve, my boss, Austin Goolsbee, Jerome Powell. Nothing I say has anything to do with interest rates, the Federal Open Market Committee, or anything like that. This is my opinions on the auto industry.
Great. Well, with that out of the way, let's get talking about electric vehicles. It was an exciting year for the EV market. I'm going to put up a slide that Stephanie provided for us here, looking at quarterly sales of electric vehicles going back to about 2019. And you can see there was definite growth, right to about 8% of auto sales by the end of last year. But at the same time, you see those last couple of quarters have slower to flat growth. So there was definitely a lot of growth in the electric vehicle market last year, but not quite as rapid as the pace had been maybe in 2022 or 2021. So just starting from there, let's talk about what 2023 looked like, why the market looked like that throughout the year, and if we could maybe start with you, Stephanie.
Yeah, thank you, Robert. Yeah, 2023, I believe, was the year of the EV. And like you mentioned, there's some slowdown. There were bumps in the road, some zigzags. But when I think about 2023, some of the highlights are, as you mentioned on the chart, we had a record year. Over 1.2 million pure battery electric vehicles were sold. The other thing we saw last year were price cuts, which is really good for the consumer. And definitely Tesla was the leader in that. Their prices from last year went down 18%. So they really drove this downward price movement in the EV segment, which is a huge barrier for consumers. So the more we can get that price to go down, the better. The other thing last year is this whole standardization and adoption of this EV charging network. So I think that as we're having more and more manufacturers that have adopted the North American charging standard, because infrastructure, as you all know, is critical. It has to be accessible, reliable, interoperable, and it has to be a seamless experience for the consumer. So I saw that happening in 2023. And if you want me to go now, I could go 2024. We're still going to see more, more product, over 30 plus vehicles for consumers to choose from. We're going to see more infrastructure, more discounts, more incentives. And one key is going to be more sales muscle. We're going to have, whether it's franchise dealers, salespeople, really being able to convey that value proposition for that consumer, because we're kind of moving now into that majority consumer. And so it's going to be really important to be able to convey that value proposition.
You mentioned affordability, and one of the vehicles that really got affordable last year was the Chevrolet Bolt, which is now discontinued. There's still a few out there. This isn't just any Bolt, though. This is my Chevy Bolt, the one I bought around March of last year, when the combination of lower prices, higher resale values on cars combined, and gave me a great opportunity to get into something. But it has been that issue that the average EV price, if you look at 2022, 2021, was well above $50,000. And it's still high, but there are options getting into that lower range. Kristin, what your take? How did you see the market last year, and what were your big takeaways from 2023?
Well, I think, in addition to all the great points Stephanie made, 2023 also brought broader application of the incentives from the Inflation Reduction Act. So there were purchase incentives that had some hoops you had to jump through to get the purchase incentives, but also lease incentives for EVs that didn't have as many hoops. So we saw a big uptick in EV leasing that came along with that. And incentives for manufacturers to invest in building plants to not only make vehicles, but also batteries, battery components, processing and refining the minerals and the mines to localize a lot more of the EV production here in the US. So the EV incentives across the board went into place, as well as the infrastructure. The Infrastructure Investment and Jobs Act, the IIJA, had $7.5 billion to build out EV charging. The very first charger for the NEVI program, or I can't remember what that stands for, but a National Electric Vehicle Infrastructure or something like that, was in Ohio. It got built out at the end of last year. That money took a little while to get out to the states and have them put together their plans, but Ohio built the first NEVI piece of the NEVI project. But that, having a robust public charging network is important for this next phase of the mass market consumer to feel confident that they can go where they want to go and have charging available for them. So these two big pieces of public policy got put into place in 2023 and will be an important underlying factor as we move into this broader base of consumers that need to know that charging is there and will want to have incentives. Now, as we turn the calendar into 2024, the purchase incentives got a little narrower. So there were some additional criteria about not having any content, having less content from countries that are called foreign entities of concern. And of course, China is one of those, China, Russia, North Korea. And China is a place where many batteries, battery components, and minerals are processed. So our list of qualified vehicles got cut in half on January 1st. So the producers now are scrambling to try to resource some of those materials that they had been, and components and inputs that had been coming from China to get them from other sources, and are offering matching incentives. So if they aren't qualifying for the federal $7,500, they're putting the $7,500 on the hood themselves.
And we saw that. Here's a picture of the Ford F-150 Lightning, which I believe still does qualify for the bulk of the incentives. But General Motors lost partial incentives on several vehicles. Tesla lost some incentives. Kia, which had been gaining some strength with a lot of new offerings, Hyundai and Kia, with some of those vehicles lost the bulk of their incentives. So it looks like there's a change in the market, but there's also a change in how you can get those incentives applied to the vehicle if you can find a vehicle that has the tax break on it. Who wants to tackle that one?
Well, you can get it point of sale now. So, it used to be you had to have tax liability and you had to, basically wait until you filed your taxes and then get it back. And now it's available point of sale. So it's an immediate rebate for the purchaser. I think the other point I wanted to make was these, there was a lot of news at the end of the year, like the slowing, it's a slowing rate of growth, but these were still the fastest growing segments in the US market. Over 50% growth in battery electric, in plug-in hybrid, and in hybrid vehicles. So all of three of the electrified segments and fuel cell as well were growing very, very fast and faster than any other segment in our market. So it's slowing growth, but growth, huge growth. So we worry about the pace slowing down, but it's still phenomenal growth in the segments.
Yeah, I want to just echo what Kristin said. Battery like close to 50%. The general market, I think we're
We just lost Stephanie for just a second. Let me see if I can get her back. Sorry about that. Can you hear us again?
Yes, can you hear me now?
Yes, we can. Sorry about that. Technical issues, obviously.
Sorry about that. Yeah, I was talking about, so definitely with leasing, we expect to have 25% of EVs will be leased on a yearly average next year. And the one thing about the IRA, I think I'm excited about that point of sale. There's about 8,700 dealers that have signed up to be eligible to provide that point of sale incentive. So I think that's good. There's still more to come. But I think one key with the IRA in general is education. So I think this year is going to be a huge push, just education. The IRA can be confusing, and even now with the new restrictions, it's even more. So I think really, whether it's franchise dealers or other salespeople from direct to consumer, just being able to have that knowledge and be able to explain the incentives, not only from a national, but the state and local as well, because that's really going to help bring that price point down.
Yeah, turning over to you, Laura, for just a moment here. You and I have discussed a little bit about the question of consumer demand. Is there, have you heard any concern out there in the market that maybe the reason things have slowed a little bit is consumer demand, or are we still thinking more about pricing?
So it feels the growth is happening. It's slower than what, there were high expectations, aim high, I guess, for EV sales, just like government and automaker expectations early on. And reality, I feel, is starting to set in, but there's steady growth. So that's great. And I think a lot of concern is, there's some unknowns around the charging network, which will shape up in the next couple of years. There's so many players in the market right now, in the charging market, and where am I going to charge my vehicle? There's still concern on the consumer end with that, and also just things like insurance rates, like is my car insurance going to go way up if I buy an EV? So once those uncertainties become clearer, consumers will more consumers will be buying EVs, I think. But right now, I think a hybrid, hybrids are a good, baby step toward that. And there's also growth in the hybrid market.
Yeah, you mentioned that, Stephanie, the hybrid growth, because we have seen a fairly significant increase. I mean, I think a lot of that could be credited directly to the Ford Maverick, the light pickup. Really showed there's some solid demand for certain types of hybrid vehicles. Can you discuss a little bit about what you saw on that side of the market?
Yeah, we're definitely, if you think about hybrid, it's a good gateway to the EV adoption. So I think hybrids are going to continue to grow. Next year, probably see 25% of the market will be EVs and plug-ins and hybrids. And so we anticipate that's going to be a great growth area. And I think it goes back to that consumer experience and what we've been talking about, infrastructure. With a gas hybrid, you don't have to worry about plugging in. So you're going to have that same consumer experience driving a vehicle. So I think it's going to be that transition to full electric. So definitely going to see some of that in the market growing next year. And, we've seen, you saw the announcement probably with Toyota, the Camry is only going to be offered in hybrid very soon. And so it'll be interesting to watch how those sales grow with the hybrid Camry.
I believe the Honda Accord is also, only going to be a hybrid model.
Yep.
So the few mid-size sedans left on the market, seems like there aren't going to be any gas-only models in the very near future.
Yeah. And
I think affordability is another.
Yep.
Oh, go ahead, Kristin.
No, I was going to say, no, you're right. Affordability. Go ahead. I'm sorry. Go ahead.
Or Stephanie. Yeah. Oh, I would say
right.
Affordability is another concern. I mean, Tesla and the Chevy Bolt are the two that are solid under 50,000, and the Nissan Leaf, I guess, too. But they've got to be, people can't afford those vehicles over $50,000. So maybe there'll be other entries into the market at that level.
Kristin, your take on the affordability issue. Do you see that being as big of an issue in 24 as it was in 23?
Absolutely. And I think, I'm focused on affordability at a conference that I did last January. I've got a sort of different taking at it this year. And my computer says I'm reconnecting. Can you still hear me?
We can still hear you.
Okay, very strange. There are plenty of very affordable EVs in the world. Them are made by Chinese producers. There's an $11,000 BYD Seagull, for example. We have a 27.5% tariff on Chinese made vehicles to the U.S. market. Even with the 27.5% tariff comes in $5,000. So there are plenty of affordable EVs.
Oh, it looks like we've lost her again. Sorry about the technical issues today. But on that side, Stephanie, if you could maybe talk a little bit about affordability. You mentioned that there are going to be more models this year, but are they going to be models that bring that price point down to where maybe the average buyer wants to be?
I think there's going to be some models we look like, I think everyone's excited about the Equinox. You're going to see like the Fiat's coming out. So I think there's going to be some options. And I also think too, as we start to see, the new EV sales fuel the used EV marketplace. So as we start to see more of these used EVs entering the marketplace, that's going to be a good option for affordability for consumers. And especially for those EVs that are under 25,000 that are eligible for the IRA incentive. So I think that's going to help, but definitely affordability still, for whether it's EV or ICE, is still a consumer barrier. And so I think that's something that we're going to continue to see as a factor in 2024.
Well,
if you really look at the past.
I was going to say another point.
Please.
I mean, there was an article in the Financial Times today about how U.S. resale value of EVs have come down by a third. Part of that is the flow through of prices of new vehicles. So we saw, Tesla cutting prices, but the incentives on the hood of EVs last year, they're coming down in the new vehicle market somewhat. So that's going to play into market, and of course the IRA incentive on used vehicles for certain consumers that can get into a used vehicle.
Sorry. And just to bring the point up that it's not like the general automotive market is particularly affordable these days. That's been a growing issue really since the pandemic, the supply chain issues that hit when there were limited chips available. The automakers pushed them off to their highest priced, highest margin vehicles. So we've been dealing with dramatically rising automotive prices for the past 3 years or so. And EVs probably are the gulf between EVs and the ICE vehicles might not actually be as extreme as it would have been had it had not been for some of the supply chain hiccups that we saw a couple of years ago. They're still expensive, but when the average vehicle is selling for north of $50,000, the average EV is not that far behind.
Well, and I think we're going to see higher prices on internal combustion engine vehicles too, as regulatory pressures increase, as volumes decrease on internal combustion engine vehicles. The scale of manufacturing scales make those vehicles cost more. So their costs are not going to stay as low as they are. Convergence is going to come as EVs become less costly, and ICE will kind of come up a little bit. So we're going to see higher costs on the internal combustion engine side too.
Right. Just to repeat, because there were some minor audio issues there, but Kristin was making the point that the cost difference, the gasoline vehicles are going to get more expensive, electric vehicles are going to get less expensive. So as we get further and further into the future, we might be seeing a market where there is some sort of cost parity between the two. Stephanie, do you see a timeline for that?
It's interesting when you look at, some of the projections for, like for an EV, up to 40% of the values of the battery. So as we start to see battery, we're seeing battery prices go down. they went down from like 2010 to 2021, like 89%. Last year they went up, but they're going back down now. So I think that's a good thing. But then also it's all about scale, right? As you start to scale EVs, we're going to start to see more price reduction as well. So it's kind of those things that are kind of going in parallel, but it's going to take some time, but I think we're moving in the right direction.
Right. Just a couple of final things here. What you mentioned the large number? Which ones excite you the most? Which ones do you think have the most opportunity to move the market in 2024?
I think you think about just all the new, like whether it's, I mean, some of the Equinox, you know, Honda's coming out with a Prologue for the first time. It'll be interesting to see how that does in the market. I think the if you think about some of the stuff with Kia, the EV9, I think what's going to be critical too is offering these different products that have different styling, different size to accommodate different types of consumers, whether you have, you know, children or if you're a single person. So I think that I'm just excited about all the different segments that are going to be growing in the EV space.
Right. And Kristin, any vehicle that you're keeping an eye on for 2024?
I'm not going to weigh in on a specific vehicle, but I'm going to echo Stephanie's point of, you know, just covering a broader segment of offerings for consumers. You know, everybody who, you know, at the beginning EVs were small cars, or, you know, even hybrids were small cars, and now it's, you know, there are pickup trucks, there's going to be minivans, there's going to be the CUV segment's getting infiltrated, and CUV is, you know, 2/5 of our market. So as there's more offerings in more segments, it's going to make it easier for mass market consumers to find something that fits their needs.
It's an exciting time. I mean, this industry has been building up for so long, and to see the kind of growth we saw last year, even if the growth continues to slow, we should still see you know, going from that 8% maybe up 9-10% within the next year or so. So there does look like it's a very exciting time for this market. And here at Industry Week, we'll continue to cover that because it's been a big driver in manufacturing over the past year. 2023 saw some of the highest investment rates in American manufacturing in the past 20 years, and almost all of that was related to semiconductors or electric vehicle battery facilities because of the chip shortages, followed by the need to get as many of these EVs on the road as quickly as possible to meet some of the regulatory pressure and to see where the demand is going. So it will be an interesting another few years to see how quickly this market develops, and excited to continue following that and bringing you the news as it happens. Thank you, everyone, for joining us today. I'd like to thank Kristin Dziczek from the Federal Reserve Bank of Chicago and Stephanie Valdez Streaty from Cox Automotive, and, of course, Laura Poutre, my colleague here at Industry Week. Have a great afternoon. Thank you very much for joining us.
Thank you, everyone. Have a great day.